Hi, and welcome to our video channel. In this month's video blog from Orange Genie Accountancy, we will be providing an answer to the following question. Should I buy or lease a car through my limited company? And what are the benefits of choosing an electric vehicle? Contractors often ask us if their limited company can provide them with a company car, and the answer to this question is yes, but there are costs involved. Company cars are classed as benefits in kind and attract additional tax. Choosing an electric car can significantly reduce those costs through tax efficiencies. So, let's get started by explaining what we mean by benefit in kind, and after that we will look at all the options available to buy or lease a car through your limited company. So, keep watching. The benefit in kind. If the car your limited company provides you with is available for personal use, so a trip to the local supermarket or to meet friends, this creates a benefit in kind that you will be taxed on. HMRC are interested in whether the car is available for personal use, not whether you actually use it, which means most contractors who have a company car will have to pay. Your limited company will also have to pay Class 1A national insurance on the benefit in kind. The amount you pay in additional tax will depend on the list price of the car and its CO2 emissions. Since electric cars have significantly reduced emissions, the benefit in kind on such a vehicle will be much lower. If your limited company pays for fuel with a petrol or diesel car, if your company pays for fuel for personal journeys, this increases the value of the benefit in kind by the standard multiplier of £24,000 2021 times the benefit in kind rate. For our average non-electric car, this would increase the taxable value by £6,720 and the total cost by £2,271.36 or £3,615.36, depending on whether you are a basic or higher rate taxpayer. The good news is HMRC don't class electricity as fuel, so there's no additional benefit in kind cost if your company pays for the cost of charging your electric car. So, if you have decided that you want your company to provide you with a car, how should you fund it? Whether your company buys or leases the car, the benefit in kind will be the same to you personally, so you will need to think about the effect on your company. If your company buys the car outright, your company can claim the cost of the car through capital allowances, which will reduce your corporation tax bill. With most other assets, this would mean the cost would be written off each year based on an estimate of the asset's useful life. However, if the asset is a car, the annual tax relief you can claim depends on the CO2 emissions. Overall, the costs of running the car, including fuel or electricity, repairs, insurance and tax, can be claimed as allowable expenses against corporation tax if your company buys the car through a finance agreement. Here there are two main options. Hire purchase, HP, is where you can pay for the car in monthly instalments until your final payment is made. The car is owned by the finance company. In this case, you can claim the full cost of the car in the first year, even though you'll actually pay for the car over several years. Alternatively, you can use a business contract purchase, BCP. BCP works the same as HP, but your monthly repayments don't cover the whole cost of the car. At the end of the contract, you can either pay the remaining balance and your company will own the car, or you can return it. If you choose to return the car, you would have to pay a balancing tax charge based on the residual value of the car. If you return the car, you can potentially replace it by entering into another BCP. You would again be able to claim the full cost in the first year, which may offset the balancing tax charge you have to pay for the car you returned. Both HP and BCP involve a long-term commitment, which can potentially cause problems if you need to close your company during the term of the contract. In both cases, the agreement is with your limited company, and ownership of the car may not be transferable to you on closure, so this is something to consider. If you decide to lease a car through your limited company, with a lease, your company pays a monthly fee for the use of the car. The car never becomes a company asset, and the cost of leasing and running the car can be claimed as an expense. This is usually a better option than a BCP if you think a long-term commitment may be problematic, particularly if you don't intend to keep the car at the end of the term. If you decide to buy the vehicle personally, if you buy the car yourself rather than through your limited company, you'll miss out on the benefit of claiming the purchase price or running costs against your corporation tax bill, but there will be no taxable benefit in kind. Your company can pay your business mileage at HMRC's published rates, which are intended to include all the costs of using your car for business. At the time of writing, the mileage rate for a car is 45 pence per mile for the first 10,000 miles in each tax year and 25 pence per mile thereafter. This is the case whether you use a conventional or electric car. An electric car will generally cost less to run, but will often cost more to buy in the first place. So you'd need to consider your specific situation and the number of business miles you expect to do. As you can see, there are a number of options available to buy or lease a car through your limited company, and the choices you make can have significant tax implications for you personally and for your limited company. So if you're considering using a company car, it's a very good idea to discuss your circumstances with a specialist contractor accountant before making any decisions. Well, Orange Genie Accountancy are expert contractor accountants. So if you are keen to find out more about how we can help you to choose the best options tailored to your needs, please email info@orangegenie.com or call 01296 468 483.